Hi guys, we're back with yet another video of reading the market as a beginner. And today is the day when we discuss the first mode in a trend. And the first mode in a trend, the first mode in a trend is always the breakout mode. Breakout mode is anything when the prices are traveling like this, right? Where the low of the bar is never swept by the next bar. So continuous upper trend candles or continuously lower trend candles where the high of the bar in the downtrend is never touched or swept by the next bar. That's a breakout move. So this is the most strongest type of trend. Why is it the strongest? Because this is actually mostly the start of the trend, and it is the strongest because this shows us that finally that sorry buyers or sellers have completely taken control and are moving the market in their direction, right? So now we're going to see some examples of it, right? Okay, let's first look at the Nasdaq and a couple of examples, then we're going to look at Nifty and a couple of examples, right? Okay, Nasdaq, the market is going up, right? The market is going up in a what? It's a trend, right? So you have to identify what the market is in. Is the market in a breakout mode? Is the market in a channel, tight channel, or is the market in a wide channel, right? As we discussed before, channel is this, anywhere where there are two parallel lines and price travels within this. This is a channel where price is traveling between these lines, like a channel lines, right? Channel, price breaks out, fails the breakout, and forget the channel right now, and you can see this is the breakout mode. Price comes down, highs and sweep, comes up, highs and sweep, again highs and sweep. This is the first time the high sweep. So here the breakout mode ends, right? But in this is actually that this shows you that the trend is strong enough for the sellers to completely take control of the market and move the market in their direction, and there is a heavy possibility that there will be some second leg. Now obviously the second leg can be a measured move, right? So if we measure it right here, and if from the pullback I look at it here, measured move, again back here, pull it here, measured move. So this is actually the start of any kind of trend. Now you can look at any chart, right? I can look at 4 hours and there will be breakout modes, right? It's impossible not to find breakout modes. Okay, bullish structure. Bullish structure, price moves, sorry, price starts moving bullish, right? From here, one candle, two candle, one candle, two candle, three candle, sweeps. So breakout mode ends right here. Channel breaks out to the top, another breakout mode, one, two, three, four. Here the breakout mode ends, another breakout mode. So this is the strongest part of the trend. The most strong part of the trend is a breakout mode in which the low of the previous bar is not swept in a bull trend, in a bullish trend, right? Where buyers are very heavily, dominant, and the same for a bear trend, right? Now we look at the smaller time frames. Easier to identify. People say that it's difficult to capture trends, right? This is the easiest way you can capture one of the most strongest trends out there, right? From the breakout modes. Again, random chart, 1 2 3 4 5 6 7 8 9 bars, breakout mode, right? You can take your trade anywhere between these if you were selling and watching this, but you need to have enough of a reason to expect a breakout mode, obviously, and we're going to discuss that in other chapters. But this is the first thing about the trend you identify. Let's say you're looking for a major trend reversal, right? You're looking for the price to reverse from a certain point to go up in a certain point, right? So it should always start with the breakout mode. It can obviously be 1 bar long, it can be 2 bars long, but there will be a breakout mode. Like if you look at it here the breakout mode is long, right? So 10 bars. Here the breakout mode is only 2 bars, 1 2, only 2 bars breakout mode, then it pulls back, right? Let's look at Nifty here, right? Nifty has the same kinds of breakout modes. Now obviously there should be enough of a reason for you to expect that there is a breakout mode in this, and then you will make money out of it, right? candle prices are in a trading range, right? Breakout happens, how many bars? 1 bar, 2 bar, 3 bar, 4 bar, 5 bar, 6 bar, 7 bar breakout mode, then turns into a channel, right? So breakout modes, again opposite thing happens here. 1 2 3 4 channel, 1 2 3 4 5 channel, 1 2 channel, 1 2 3 channel, 1 2. So many breakout mode bars. Anything that doesn't have, it can be 2 bars, it can be 10 bars, depending upon the strength of the trend, right? And if it's further strengthening, right, every channel will also eventually have a breakout mode. That is the essence of looking at a trend, or looking at the starting of a trend. If you look here, the last day of Nifty, 1 bar, 2 bar, 3 bar, 4 bar, 5 bar, 6 bar, 7 bar, 8 bar, 9 bar channel, 1 bar, 2 bar, 3 bar channel, 1 bar, 2 bar channel, 1 bar, 2 bar, 3 bar, 4 bar channel. How many times have you seen this in the market and thought, what is this, what is this happening? It's essentially price breaking out of a level. Now price can break out from, price can break out from a multiple things. Price can break out from a trading range. So let's say till now price was traveling like this, right? And then it has here, pulls back, and now this line becomes the breakout mode, and you can trade on any of these bars and have an SL below here, and then you can keep a target. As soon as the price sweeps a previous low, you can exit it. It can be a 1 to 2, it can be a 1 to 3, depending on where you entered into the market, but that is the essence of a breakout mode, right? So it can get out of a trading range, right? It can be out of a previous high or low. It can, so let's say price is moving like this, right? And then price start moving like this. So this is the breakout mode, right? Moving like this, and then price does this, breakout mode, right? So this is the start of the trend. Mostly this is always there. So let's say it breaks out of here. What is that? That means the price has such strengthened that it is starting moving very quickly to the downside or very quickly to the upside. That means here the buyers and sellers have enough conviction to take it up or down for enough period of time. That is every time the start of a new trend. Every start of a new trend is going to have a breakout mode, right? So you need to start identifying this more in your charts. Now, we've discussed three things till now in our 3 episodes. The first is price is always in a trend or a trading range, right? The second thing is we discussed what are the 3 different types of or modes of a trend, that are breakout mode, tight channel, and wide channel. Today we discuss what is a breakout mode, right? Once you start marking these out on a level, and obviously we're going to have a complete video to show how to put all this together, but this is currently a step-by-step guide to make you understand how the market actually moves, right? You don't need any indicators, you don't need an RSI divergence, you don't need a MACD indicator to see how the price is going to move. What the price is telling you that itself. You just need to be looking enough on it and have to be able to understand the previous context out of it. So a breakout mode somewhere, so a breakout mode did happen here. Here was a breakout mode, failed quickly, channel, but you have to understand it's above a previous high. Breakout mode failed very quickly, channel line, reversal, right? So you have to understand this with the context of the previous days. But here if you look at it, price opened downward, had a breakout mode, and now the channel keeps on expanding. Another breakout mode closes, another breakout mode. You have to understand that. But once you have all the concepts with you, you know how you can all pair it together, how you can all bring it all together, then I think you'll have a better understanding and you'll be able to make better trades with better understanding and analysis, right? So that's it for this video, and see you in the next video, guys, where we're going to discuss tight channels and see how those move the market, right? See you guys in the next one. Bye bye.